I'm Jody Akerman with Windermere Puyallup, and this is my awesome friend. His name is Bruce McLaughlin with Eagle Home Mortgage. Welcome, how are you?
Great, how are you?
Good, cheers.
Cheers.
Thanks for the coffee from
Absolutely.
Anthem right next door.
Anthem Coffee next door in Puyallup. Brian has 4 locations now.
Wow, it's a good place to meet up.
So,
Yeah.
I love it.
And we like our lounge downtown.
Yes,
Glad to
always
meet
good
up.
spot to meet at Windermere.
All right, so let's get right into this. So a lot of first-time homebuyers, they don't know if they're ready to buy a house. How do they get started? What are the things they need to start doing?
The first things is your schooling, if you're going to college, your time on your job, your credit, and then your down payment. You know, those are some of the big things that people need to look for depending on different programs. And all the programs, majority of all banks use the same programs, so we all kind of play with the same pool. So everyone's guidelines are pretty much the same for the basics for what people need to qualify for.
Okay, so what kind of a credit score would somebody need?
Some programs go all the way down to 500 credit score, but majority of the programs that are out there are going to start from around 600 and go on up.
Okay.
And there's everyone's credit varies and everything's a bit different. So some of the programs, such as the Down Payment Assistance Program through Washington State, they require a minimum credit score of 620. And for us, for the different programs, we usually have a minimum of 580 with our bank itself, is where it blows everybody onto. But for everyone else, it's a good time just to have the credit pulled. And what's different is that when people do their credit report with mortgage, we're pulling all 3 credit bureaus. Whereas sometimes people have Credit Karma or another service, they only see 1 or 2 of their scores.
Really?
And credit score is going to be different when we pull a mortgage inquiry compared to when we do it as a revolving loan, like a credit card or an auto purchase. The scores vary.
Okay.
And some of the programs, the credit scores aren't as big of a deal. So a person that has a 720 credit score on an FHA loan virtually has the same rate and fees as a guy that has a 660 credit score on an FHA loan. But it changes if you go to conventional. It becomes more of a difference factor of what your credit score is high to low, and it has a bigger effect on what your interest rate and fees can be.
Okay, great.
But for someone else, they can start anywhere.
So how long would someone need to be at their current job in order to get approved?
There's a couple different factors with that. It's not just straight time on the job. Generally with all loans, we need 2-year job history or college transcripts. So if you've gone to school and you've been in college for 2 years and you're, whether it's a computer major or a nurse or whatever, and you got out of school and you are just starting your job, you've been there a month, you're okay. We can use your salary where you're going to be paid or if you're on a contract. The variable to that is if someone's commission based, if they receive tips, then they have to typically be at the job for 2 years. Anytime you get commission, if there's not a 2-year history, we don't know what they're going to make. So we have to have now 2-year job history for tips, income, overtime, bonus income, things like that. And so that's where it's best to when we review your file to figure out what we can use and can't use.
That's great news for millennials though, because a lot of them are just getting out of college, getting into the workforce, and they don't think that they can buy right now. That's not true.
Absolutely. And there's times where my own loan years ago that I had to buy a house and I was a commission-based employee, and my parents helped me and they co-signed for the first year on the loan, and then we refinanced it and took them off the loan. And so I couldn't even do it for myself years ago because of that situation. So there's so many different pieces to it, and that's kind of where we as loan officers sit back and we have to dissect your income and how you're paid to figure out what's what.
Yeah. Well, what is the difference if someone is self-employed, for example?
Self-employment is very different, and it's similar guidelines as what we have with overtime and bonus income. It's a 2-year job history required, at least minimum. And self-employed can be getting 1099 income, can be getting, if an employer pays you a 1099, but you work for someone, well, now you're self-employed. And so typically that's a 2-year history needed for that. It can be in cases of 1 year, if depending on which program's used, but generally it's 2 years.
Can their income tax be a problem if they're claiming a lot of deductions for the year?
Absolutely. So we have clients that they bring in a gross revenue of $100,000, but then they say, oh, I made $100,000 this year. Well, the way that the underwriters look at the loan is they say, okay, you brought in $100,000, but the cost to make that $100,000 was $60,000 per the tax returns. Well, now your net income's only $40,000.
So what can they do to remedy that?
Not try and write everything off under the sun.
For like how many years?
2 years.
Okay.
Yeah.
So if
It's
you're
gonna be 2 year
self-employed and you want to
average.
buy a home, just start now. With this next tax season coming up, don't do as many deductions.
Absolutely. And if you're going to buy a house or you want to refinance, have me look at your prior 2 years, see what's there, see what you're doing, and I can tell you how high we can go up to and how high we can't. And then there's maybe some ways that some people write off all their cars when they don't need to. They write off every food item that they ever buy and they don't need to. Unfortunately, the underwriters and the lenders don't know what it costs to run that business.
Right.
So their assumption is they have to roll everything in.
Exactly.
And that's what it was from now to what it was 10 years ago. So
Okay.
it's a lot more strict than it used to be.
So now that we know all of that awesome information, thank you for sharing that. What is the first step that people can do to get pre-approved?
The first step, and it's easy, it's free, there's no cost. They can give me a call, they can go onto my website and apply. Pull what they call a tri-merge credit report, all 3 bureaus. I'll then get your items, your last 30-day pay stubs, your last 2 months bank statements, your last 2 years W-2s, your last 2 years tax returns. Review everything and tell you where you really sit, how high of a loan you can go up to, and then go over your different payment options for what's most comfortable for you and your family.
And you'll also go over the different programs that are out there.
Absolutely.
Now, what if somebody doesn't want that hit to their credit? Would a consultation with you be appropriate, or how would they handle that?
We can still try and guess if they want to pull their own credit reports directly at Experian.com, Equifax.com, TransUnion.com. But if you're buying a house and you're going to go through everything, it's good just to have us pull a free credit report. The 2 to 3 point hit that this credit report does on your credit is nothing when it comes down to it. What I like to do is put a game plan together for you to know if I want to buy a house in 6 months or a year or 2 years, how do I get there? What do I need to do? Well, we got to start at the base. And guess what? In a year or 2 years when you get ready to buy that house, that inquiry means nothing.
Exactly.
Absolutely nothing. What you don't want to do is go get inquiries for 20 different credit cards. One mortgage inquiry is not going to hurt your credit.
Exactly. And if their credit isn't where it needs to be, what can you help them with?
We have an in-house credit repair team that works for our company. They can go through to try and help and fix a lot of things. But also, someone may think they have horrible credit. And a lot of those issues comes from medical collections. Well, the good news is on FHA loans and some of the Fannie Mae loans, they don't care about the medical collections. Those are ignored, generally. So we can just not worry about those, and then we only have to worry about missed phone bills, cellular phone, things that are actual collection issues. Sometimes need to be remedied if it's over $750. Sometimes I look at someone's credit and I say, hey, we can move your credit score up by 30 points by paying down this credit card at this balance. Closing this one thing that's, you're not using. There's so many different pieces and everyone's credit's so different that we just need to figure out what's there. Besides, it's a matter of just paying down some debt and then keeping the credit cards open longer instead of trying to close every other one or vice versa.
So you really need to talk to someone because there's so much information that you might not know, and it can get you there faster than just trying to figure it out on your own.
Yeah.
That's awesome
Absolutely.
that you guys help with that. And what would you say, last but not least, what would you say is the biggest misconception that buyers have going into this process?
A lot of buyers think, one, they need to have 20% down. They need to have 10% down. They need to have 5% down. They need to have all these things above and beyond what they actually need. We have programs with USDA that does 0% down. We have programs with Washington State Down Payment Assistance at 0. They help with the down payment, and they carry the down payment for you. There's different ways for mortgage insurance to be lower for people. There's ways to get in for conventional financing with 3% down. You can get your family wants to help you out. They want to give you the down payment, but you think you need your own. Well, we can do gift funds from families. So there's so many things, and it goes back to just kind of going like, what do I do? Where do I start? And you just need to sit down with someone that can help be your coach and coach you along the way and advise you as to the right things to do.
Okay. Thank you so much for your information. I really appreciate it, and you've helped me out with tons of my clients. So I really like working with you, and I appreciate you so much.
Absolutely.
Thank you for
Thank
this.
you.
Yeah. If you guys want any more information on getting pre-approved, you can contact me or Bruce. And you want to give a little shout out to your company?
Absolutely. With Eagle Home Mortgage here in Puyallup, Washington. My number is 253-651-5755.
My number is 253-720-0511. Once you get pre-approved, come and see me. Thanks.
Cheers.
Oh, that was easy.
Yes.
See?